It's a good morning. How are you all? I hope that everyone is cool. I'm feeling little nervous because been a long near about two months. I didn't touch the mouse, so the mouse is not working. By the way, can you hear me? Finally, it is back. Good morning, Archana. Uh, Anas, I miss you too as well. Seriously, Donichu, I can see you, man. I miss all of you, to be honest. Sudivan, good morning, brother. Jondre, hello, brother. How are you? Yes, brother, we can hear. Thank you, Sudivan, for confirming that you can hear me. Though I told that I am not going to be active, but you know that I was active because I'm addicted. So to be honest, I wanted to stay out of the chart. That's why I didn't, the buy the real-time data so that I can stay out, but I couldn't. Thank you, Richard. Good morning, brother Hunter. I believe that everyone was so good. The price action was not that bad. It was a little bad some days, but overall it was so good, in my opinion. Good morning, Madalena. Probably trader, long time no see. Yeah, brother, near about 2 months, 60 days, 50 days, something like that. Today I just came for saying hi, hello, as well as to talk about a price action a bit. No weekly analysis, nothing. Not going to do that. All about the hindsight. So I am a hindsight guy, by the way. So I would love to talk about the hindsight price action. But trust me, it will help you. It will help you because whatever I'm going to say today, everything was pre-predicted, and now it is hindsight. But while we are talking about that price action, it was not hindsight. So the price didn't print on the chart while we are talking about that. How's your trip? My trip was awesome, brother. It was awesome, to be honest. I did not Islam, but wish everything blessed for you and family. Thank you so much, brother. Everything was awesome, to be honest. I really enjoyed this trip more than any trip in my life. Mm, because of the, you can say, the religious issue as well as new country, new religion, I mean, new culture, new everything, new weather. So hot though, near about 41, 42 degrees Celsius, but it was awesome. We can talk about the price now because tomorrow the greetings will be happen again before the stream. I'm Sutipong. This is my new account. Okay, Suti, how are you, brother? Yeah, I was thinking about this guy. Who is this corgi trader? I didn't know him. Now I know you, Sutipong. Okay, let's talk about the price action a bit. This is the weekly chart for NQU. That means I'm using the NQU because of the contract change. Let's go to the NQ1. Don't say it's too slow. Yeah. By the way, if any of you are using NQ1, make sure that the B add, you see this adjust for contract changes, it is toggled 1. Okay, don't toggle it off, because if you toggle it off, the price is totally different. Okay, it's totally different. Make sure it's actually toggled 1, and I would love to use the set is 1 as well. So these two should be 1. A set depends. Sometimes ICT toggle it 1, sometimes I love to toggle it 1. Okay, so it will be, it will give you more accurate price if you toggle it 1. There is a long discussion about set, but BADZ, it should be toggle it 1. Okay, no off, it has to be 1. So here I would love to talk about the price action from around this area. If you remember that week 50%, we have predicted that if that week 50% is broken, market is going to make another all-time high. If the week 50% is not broken, then this market is going to fall for this sell side liquidity. That means this low and that low, they are the relatively equal lows. According to me, it was obvious liquidity, so that was my target, and I was pretty much confident that this market is going to fall to take this liquidity. After taking this liquidity, while this market will take that liquidity, I told that this market will keep falling until this area. So here we have marked both last fair value gap and the entry fair value gap. Now I'm not renaming anything over here. Okay, no renaming, no rebranding. I used that word last fair value gap, entry fair value gap, so that I can specifically draw your attention in a very specific fair value gap. That is why I gave them some name. Otherwise, everything is fair value gap, right? If I say this is a fair value gap, you will never understand which fair value gap I'm trying to draw your attention. That is why I gave them some name. Last fair value gap, the immediate fair value gap above the last fair value gap is the entry fair value gap. Marked both fair value gap, and I told that while this market will come here, this is the area where you are going to invest the money, not trading, investing, because this is going to happen. I mean, this market is going to go for the moon from exactly from that area. Okay, nothing is hindsight, everything was with I mean pre-predicted. Okay, this market fall, while I have seen that it came exactly to this last fair value gap, I adjusted the last fair value gap, I removed the entry fair value gap from my chart because it came exactly to the last fair value gap. It came to this last fair value gap. I tell that no more sell, only buy. How long I can buy? Until this last fair value gap from the weekly chart. There will be no retracement, no reaction, nothing until this market come over here. There was a day here, that day was that week was absolutely went against me because I was bullish, and that was a bearish week. But around this area, first day, that means in Monday, I was wrong. Then Tuesday, Wednesday, Thursday, Friday, I keep saying that keep looking for sell. Nothing is hindsight again. Okay, I told keep looking for sell, and then started to look for buy again from the next week. It happened, came here, started to retrace. So that was the retracement candle or retracement week. I will talk about this as well while I'll be in daily chart. But here is the thinking process. Why I was looking for sell around this area? Because market has made the all-time high here. First, it has made relatively equal highs, though it was all-time high. But as it was a shallow run, I told that I'm not convinced. It is a shallow run, so I'm not convinced. While I've seen this, where market has cleared relatively equal highs, made a new all-time high, as well as our standard deviation projection area, I told that it's time to look for sell, only sell. This market fall. When it started to go higher, this whole area, I was not happy with this price. Traded that week 50%, that was the last line for going higher. Trade it, fall. How long it can fall? Until this liquidity is not taken. Always look for relatively equal lows, relatively equal highs. If you follow them, most of the time your bias will be absolutely correct. There will be no confusion, nothing, everything will be correct. Now I'm not saying that previous day high, previous day low, previous week high, previous week low, previous session high, previous session low is not liquidity. If you love to use them and if it is helping you, go for that. I don't use them. For me, liquidity is relatively equal lows, relatively equal highs. You will understand why it is important while I will talk about this week price action, where I had some bias, and then the last Friday I had no bias, simply no bias, no previous day high, no previous day low, nothing. How did I know that? The way I knew it is only depending on relatively equal lows, relatively equal highs. If you practice them, I promise you, brother, 90% of the time your bias will be right. 90% of the time your first job is to look for relatively equal lows, relatively equal highs. Use that liquidity concept with your weekly and daily bias or daily time frame. That means your weekly or daily time frame is telling you that this market is bullish, and from your lower time frame, from 15-minute chart, from hourly chart, you have some relatively equal highs or relatively equal lows. You will expect market, if you have relatively equal lows and your weekly chart or daily chart is telling you that market will go higher, then you will expect market will clear that relatively equal lows, then it will start to go higher toward the relatively equal highs. So relatively equal highs, relatively equal lows concepts you will use with the daily and weekly bias. It will be clear when I will go little further more. By the way, you can hear me correctly, right? Welcome back, Tito. Thank you, Mark the Shark. Miguel Jr., good morning, brother. Sachin, welcome back. Thank you so much, brother. You can hear me clearly? It's gonna be little complicated, but listen to me carefully. I hope that it will help you to understand lot of difficulties. Okay, a lot of difficulties. It will be absolutely clear, absolutely easy to understand if you just listen to me carefully. But it's gonna be little complicated because the same thing I will say again and again, and you will get little confused. But slowly it will knock on your head. Okay, this guy was talking about that. While this market fall here, how did I know that it is going to fall? Because relatively equal lows. How did I know that it is coming until this area and then it is going for the moon? Because this was the bubble around that area while the Americas what to say, I mean the situation was not good, but this market was pumping. So it's called the bubble. While I have seen this bubble, I was thinking why it is bubbling. The Nasdaq has so not the Nasdaq. I mean the DeepSeek around that area where the other company, what is that name? Nvidia has fully crushed. Okay, everything is crushing, but the market is pumping. Why it is happening? Because this is the bubble. Market is going to make the bubble, and the bubble burst here exactly from the week 50%. So I was expecting it is going to fall, but it was not falling here. All of these weeks, maybe I'll be wrong. For example, maybe I'll be wrong. So forget about the lower time frame. I will be wrong. And then while this market is pumping again, I have the last line, that week 50%, very specific week, that 50%. While it trade there, now it's time to fall. How long? Until the last parallel gap. If this last parallel gap is broken, now I told that it's time to invest here. Maybe I'm wrong. This market is going to fall again. Okay, so it's not reversing from there. Why it is reversing from there? Because this is a very specific area, that is the last parallel gap. While there is a last parallel gap, is there any other last parallel gap? Do you see below this relatively equal lows? Where is your next last parallel gap? This is the last parallel gap below this relatively equal lows. So this market is pumping until this area. It is obvious. If it is broken, I will look for the next last parallel gap. Maybe that is here somewhere. I don't know where it is, but maybe here somewhere. But until it is not broken, I am going to believe that this is the area where I have to think about the all-time high, because it has already cleared all the liquidity. All the supporters got stuck over there. They got stopped out. Now it's time to go for the sellers. Whoever think this is the relatively equal highs, they should be stuck. Okay, so this is a logical area where I should think about reversal. I got the reversal. Now while I got this reversal, I know that it is going for the moon, but can it go directly to the moon? No, it can't go directly to the moon. So it has to give me some kind of reaction where I will predict that reaction. Of course, the last parallel gap. Why last parallel gap? Why not the entry parallel gap? Because entry parallel gap has been traded here one time. One time this market has been traded that entry parallel gap already. See here, this candle tap to this entry parallel gap, fall again. So the entry parallel gap has been used already. While it has been used, I am going to remove it from my chart. Sometimes you will see that the reaction happened from the entry parallel gap again. It happens, but most of the time it doesn't matter. The entry parallel gap has been traded. I don't care about that entry gap as well. But last parallel gap, it is always important. If it can be traded like 3, 4, 5 times, 6 times, 8 times, 100 times, it can be traded. But entry parallel gap, I would love to give the priority just one time. Got here, traded that. So this is the next area where I will expect some kind of reaction. See this reaction? Now look at the run, like bull, 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 bull. 1, 2, 3, 4, 5. Almost 5 candle stayed here. Didn't move. Why? Because this is the last parallel gap. It is struggling to break it. The way it struggle here to break it. Didn't break, simply tap, boom. Here, it should go for the moon, but it has to break that last parallel gap. That is why it was struggling over there. I told that while this candle is going to be, this gap is going to be broken from the daily chart, market is going for the all-time high again. From the weekly chart, it is broken, going for the all-time high. Is it done? No, it's not done. I will mark the line where this market is going for. I will show that standard deviation projection again. But first, if you understand this logic, why it moved here, why it moved there, sell side liquidity, buy side liquidity, last fair value gap, all time high, struggle with the last fair value gap, broken the last fair value gap, boom. I think this weekly chart is clear to all of you. I would love to go to the daily chart. Okay, so here, while I'm in daily chart, I would love to use the NQU. NQU here. Okay, so here is the NQU. This is that last fair value gap from the weekly chart. If you remember, after this weekly chart, this was the candle. Okay, this candle came here to this volume imbalance. We knew it that this market is exactly coming to this volume imbalance, and then from this volume imbalance we are going to get the reaction. How far we can get the reaction? Last fair value gap with the entry fair value gap, as well as here we have the breaker block from the daily chart. I'm not able to show you here because it's little messy over here, but whatever it is, there is the breaker block from the daily chart. Lowest down close body close candle is my order block. This candle has validated this order block. Trade the order block 1 time, 2 time. It should expand higher, but it didn't expand. It has retested this order block open. This is the opening of this order block, the strongest area of the order block. Now, is this the level high, open, and the 50%? No. From here to here, this whole area is the order block. Just a second. Okay, this whole area is called the order block. What is the most sensitive point of an order block? The open of that candle. That is the most sensitive area of the order block. That means this market can reverse from the top of this wick or of this whole block. It can reverse from anywhere of this block, but if it come here to the opening of this order block, that is the most sensitive area. If it is broken, then most probably this market will trade the mean threshold or the 50% of that order block, most probably. But while it will come to the open, that is the most sensitive area of an order block. Always remember that this is the most sensitive area. Lowest down close body close candle. This is your order block. No, this is not my order block, because there is another candle that has closed below that candle. This is that candle. Simply this candle open, market has traded that open, started to go higher. What should it do? Broke that new week opening gap. Did it broke? Of course it has broken. That specific candle has broken the new week opening gap. That gap retest this new week opening gap here by that specific candle, started to go higher. While this market started to go higher around this area, there was a confusion. If you remember, ICT has showed that we had a lot of thinking here. I told that I'm going exactly against of ICT, and I'm not sure I'll be right or not, but I want to see that this market will fall to this area from here to here. That was the area I wanted to see this market will fall. More specifically, I wanted to see that this market will come here to this volume imbalance, which was a new week opening gap. I wanted to see this market will maximum fall until this volume imbalance. Why I was expecting like that way? Because this is a premium area. This market came to the very premium. While it came to the premium and now reversing, it should go to the discount. So to this specific leg from here to here, this is that discount level. Okay, that is the discount level. This is the premium level. I didn't expect that this market will reverse from the premium level to the all-time high. I wanted to see, by the way, here was the last fair value gap from the weekly chart. So I'm sorry to mark it, but just remember exactly over here, that was the last fair value gap from the weekly chart. So at the same time, we are expecting this market will reverse from that last fair value gap from the weekly chart. While it came here, we are expecting this is going to reverse from the weekly last fair value gap. Okay, not the daily, weekly last fair value gap. It came to this weekly last fair value gap. I was expecting this market will come to this specific fair value gap from there to there, more specifically to this volume imbalance, but it is optional that it will come to this volume imbalance, but it has to come to this fair value gap here. Why? This is the last fair value gap to that specific leg, as well as it should give me the reaction from the weekly last fair value gap. So weekly last fair value gap, while this market reach to this weekly last fair value gap, it will start to fall and people will start to think that, okay, this market has cleared all the buy side liquidity, everything, it has pumped a lot. Now it will start to fall again. That is the trap. This trap I am going to use as a reaction. It is not going to reversal because this market has to go for the all-time high. So I'm going to use this as a reaction. If it has reacted from that last fair value gap, it simply can't fall a random level and then can't go to the all-time high again. It has to go to a very specific level. What is that specific level? The last fair value gap. More importantly, the discount area. Why? It is coming from the premium area, right? This market is in deep premium here. It came from there to there. This is a deep premium level. So while this market is reversing or reacting from the premium level, it should reach to the discount level, and to the discount area, whatever bullish period I have, I am going to give that highest priority to that premium discount level. So my expectation was it will come here and then it will go higher. Now market didn't do that. Instead of that, it just came to this fair value gap and then started to reverse. I know that it is going to reverse from this gap, but I was more specifically wanted to see it will come here. I'm wrong. Market didn't come here. Do I care about that? Absolutely, I don't care about that. While it came here, started to react, I'm more interested to look for buy again. Why? Because this is a bullish market. I know that today or tomorrow, the last fair value gap from the weekly chart is going to be broken. Today or tomorrow, it is going to be broken. When it is going to be broken, I don't know. So I need to look for sell only until it doesn't come over here. While it will come to this fair value gap, I will start to think two way. First way, is it willing to come to this discount area and to this volume imbalance, or is it going to reverse to the all-time high, going to break that last fair value gap from the weekly chart? Which is going to happen? If I see, oh okay, it is showing me the sign that I'm more willing to fall, then I know that how far it is going to fall. That is the last area. It is going to fall for this area. It didn't start to fall. Instead, it started to go higher. So what should I think? Oh, okay, it has done its job. It tapped to this gap. Now it is going higher. I should think about the buy only. No sell, buy. While it came back again to this last fair value gap from the weekly chart, what should I think? Stop. Nothing to do. Until when? Until the body close above the weekly last fair value gap. This is that candle which has closed above the last fair value gap, I guess. Let me actually check. So let me keep that last fair value gap over here so that it will be easier for me and for you as well to think where is that broken. Okay, so I'm going to remove that one. This is that last fair value gap, okay, from the weekly chart. I'm going to remove this one. This is that candle, okay. This candle has broken that last fair value gap from the weekly chart. Now brother, you have marked the weekly fair value gap and using the daily candle. Why? Because if I want to wait for the more precision, more precise price action, I have to wait for the weekly candle to break that last fair value gap from the weekly chart. That means same last fair value gap from the same time frame. Last fair value gap from weekly chart, candle from weekly chart. But if I wait for that, maybe I will miss 1, 2, 3, 4, 5 weeks. Okay, I will miss all the trading for the bias. So what I'm going to do, I'm going to use the immediate lower time frame to break that fair value gap from the upper time frame. For example, this is the daily last fair value gap. What I'm going to do, I'm going to use that daily fair value gap or daily last fair value gap is broken from either hourly chart or 15-minute chart. Why? Because that is my immediate next time frame. No brother, 4-hour chart is the immediate next time frame of daily chart. No sir, the immediate time frame of the daily chart is maybe 12-hour chart, maybe 20-hour chart. Okay, I use weekly, daily, hourly, 15-minute and 1 minute. So the immediate next time frame of the daily chart is hourly chart to me. If I see hourly chart has broken the daily last fair value gap, I am more than happy to say that, okay, the daily last 5 value gap is broken. Weekly last 5 value gap is broken by daily candle. I'm more than happy to see that it is broken already from the weekly chart. Maybe this is the last 5 value gap from 15-minute chart. If I see 1 minute chart has closed above the 15-minute last 5 value gap, I will say, okay, that is broken. That is broken. Now there is something called fake breakout. One candle close above this fair value gap, and the very next candle close inside this fair value gap. I called them as a fake breakout. So if I see this type of fake breakout, I have to more patience over there. I have to look for that. Is there any liquidity that market is more interested to take? If you take a closer look around this area, while this candle has closed above this fair value gap from the weekly chart, what I am looking for now, all-time high. Okay, market is going to go for the all-time high. Why? Because the body has closed above the last fair value gap. The very next candle closed inside this gap. This is the gap. It has closed inside this gap. What does it mean? I already don't know. Okay, this candle, that candle, that candle. I don't know. I am seeing the market like this way. This way. Okay. So the very next candle closed inside this weekly last fair value gap. I'm seeing this is a fake breakout. While I have seen this is a fake breakout, why it is making the fake breakout? I don't like it to see as a fake breakout. Okay, then the very next candle has closed above this last fair value gap. What does it mean? What does it mean? That means it is not fake breakout anymore. This is broken. The last fair value gap is broken already by that specific candle. I don't care about anything else. This market is going for the all-time high now. I don't care about anything else. Very next day, this market fall, right? It came here. The very next day, it came here. What I have done? I took all the losing trade, maybe 2-3 trade. I took that all of them are losing trade. Excuse me, all of them losing trade. Why? Because I'm now looking for buy only. Listen, I am now looking for buy because it has already confirmed the last fair value gap is broken. So that specific day I am wrong. The very next day I'm right. 100% I'm right. Oh wow, boom, 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 boom. All of them are the winning trade. Very next day, losing trade. While I have seen the very next day I'm losing and market has closed above this fair value gap, still it is not willing to go higher. I'm more interested to see that there is a lot of other things here work actually. For example, if you have CPI week, if you have FOMC, if you have NFP, they're different. I'm talking about a general price action. Okay, so you know, if you have a major news, how to utilize them. I'm talking about the general price action, the normal thinking process. Then what I do, I minimize or I get more specific depending on the days. For example, Monday, accumulation day, Wednesday, expansion day, Tuesday, manipulation day, or if there is any news, then I criticize the price depending on that news. If I have like TGIF, okay, maybe in Friday there was no TGIF, so in Monday I predict that this market is going for the TGIF line first, even though I'm bullish. Maybe this is the Friday candle. Okay, for example, this is the Friday candle and this is the Monday candle. For example, okay, this is the Monday candle. So I'm thinking that, okay, so this market is, though I am bullish, but this market is going to fall for the TGIF line first and then it will go higher. So I will try to look for sell only in that until the TGF is not completed. I will look for sell only. Okay, so this is more specific things depending on the specific days or a specific news. I'm talking here about the general price action. So while it has closed above this gap, I'm more interested to look for buy. At the same time, while this candle has closed again above this gap, it should keep going higher, but it didn't go higher. Instead, it has fallen again. Then I will think why it is falling. Is there any sell side liquidity? That is so obvious that market is willing to take that sell side liquidity before going higher. If I get something, for example, here you can see that sell side liquidity. Isn't it so beautiful, so clean, or something like that? So market is not willing to go higher until that sell side liquidity is not cleared. If that sell side liquidity is cleared, then this market will go higher, and there is nothing that can stop the market to go for the all-time high. So market is not willing to go higher just because there is some clean lows that has to be taken before going to the all-time high. Do you get my point, brother? I need to confirm because I told that it's gonna be little complicated, but if you listen, try to get the point of thinking process, it will help you. I am more interested to look for buy only, but I can't look for buy while this market is not moving higher. Even it has tried this way, hard way, right? Hard way. This is a very big run. The very next day, I was looking for buy only as well, but I got just stopped out because I was looking for buy. It was falling. Why? Why it is falling, brother? After even that big, strong run, why it is falling? So I have to rethink the process. This is now I'm going to use as a sign that the last parallel gap is broken. So market is going higher for sure. There is nothing that can stop the market to go higher because it has already left the sign here that I'm going higher. But there is something that is unfinished. It has to finish that things before going higher. What it can be? Of course, just the one thing. Relatively equal lows. Nothing else. No previous week low, no previous day low, no previous session low, nothing. If there is any relatively equal lows, that is a very strong support. If there is some kind of clean lows, that is the thing stopping the market to go all-time high or to push harder to the buy side. What happened? Look at that candle. Just look at that candle. That candle has cleared that liquidity. Just look at that. Cleared that liquidity. Left the sign over there. And now look at the speed. Just look at the speed. 1, 2, 3, 4, 5, 6. 6-day bull until the all-time high. Do you see just the expansion? Just after clearing that liquidity, it has tried to go higher. Fake breakout, confirmation of the breakout. Okay, 1 day fall, one more time to trade the order block or something like that. Okay, accepted. No problem. Accepted. 1 day is losing, accepted. Boom. Closed above the last fair value gap. What is going to happen? I don't care about that liquidity. I am bullish. This market is shooting to the all-time high. Nothing can stop the market to go all-time high. Even after seeing that very strong bull day. Close that last fair value gap. It is just willing to take that relatively equal highs. I don't care about anything else. This is more interested to take that all-time high or relatively equal highs over there. Boom, market fall again. Okay, something is wrong. While it didn't give me the run, like look at that candle. Okay, this candle closed very strongly. So every single day is gonna be bull until that relatively equal highs. This is so simple. But after that very bull strong day, I got losing trade only. I was looking for buy, but I get losing trade only. Why is it happening? Why it is not moving toward that all-time high or to that relatively equal highs? Something is wrong. What is that wrong? Relatively equal lows. But brother, you didn't give a shit until you got stripped out to that specific day. Why you didn't care about that sell side liquidity? Because this sell side liquidity is a later job. I'm thinking that this sell side liquidity will be left open over here. This market will go to the standard deviation level, and then while it will start to fall again, then it will go for that sell side liquidity. Like that sell side liquidity. Remember, there was the relatively equal lows from the weekly chart was absolutely open. Remember the relatively equal lows open. Market didn't clear that sell side liquidity. Why? Because it left open for the later use. So I'm going to think that this is the same sell side liquidity that is going to be used for later, not now. It has already closed above this last fair value gap. If it wanted to take that sell side liquidity, it was not going to close above the last fair value gap from the weekly chart. Okay, I'm going to use the weekly chart last fair value gap. There is the daily last fair value gap as well. You can see it has it has reversed from the daily last fair value gap. This is the daily last fair value gap. Okay, this candle trade the daily last fair value gap, reaction sent the market lower, cleared that sell side liquidity, boom. So I'm combining two time frame in one time frame. For example, I'm not interested about that weekly chart. So there is no weekly last fair value gap or something like that, or weekly. You don't know what is happening in the weekly chart. You are more interested about the about the daily chart. While this candle reached to this last 5 gap from the daily chart, until this last 5 gap is not broken from the daily chart, I will keep thinking about the some kind of reaction. In that type of situation, I will miss lot of trading days. That is why I would love to use the weekly last 5 gap, as my whole analysis is depending on the weekly chart. All of this fall, all of this area, everything is depending on the weekly chart. So my base of trading is weekly chart. What is happening in weekly chart, where this market is going for from the weekly chart. So this is the base of trading. My highest time frame is weekly chart. What is happening in weekly chart? Is weekly chart willing to go higher? Is weekly chart willing to go lower? Then I will use the daily time frame. So here, while this market fall, that specific candle, while it is fall, I will rethink about the price one more time. Okay, so even after getting that strongest bull day, though market should keep going higher, but it didn't go higher, I got stopped out all of my buy in that specific day, that is Tuesday. What is going to happen in Wednesday? Of course, this market is going for that relatively equal lows. So Wednesday, I'll look for sell. Thursday, I will look for sell. Market has cleared the sell side liquidity in Thursday. Friday, what I'm going to think? Anybody can tell me? In Friday, what should be my bias? I need this reply, please. I'm wasting your time, but trust me, brother, it will help you. Okay, it's not signal, it's not something copyright something, but this is the whole thinking process. Hi Titu brother, I got little late. Good to see you in live. Thank you, Fanny. MB Trader, I'm back, sir. Yes, sir. Good morning. Rahul, how are you, brother? Matthew, man, it's good to see you back to live. Titu, thank you, Matthew. Bullish. Absolutely, Sudipan, bullish. Because sell side liquidity has been cleared, I will just clearly I will look for buy. Now there is nothing. I have the sign. Last 5 gap has broken. Sell side liquidity has taken. This market is going to go higher. Closed there. The very next day, little low, go higher. Very next day, went lower, little go higher. Fall again, go higher. Fall again, go higher. Until where? Buy side liquidity. Just look at what happened. Cleared the buy side liquidity, then for the first time market gave me a bear candle. Do you see the beautifulness of this price action? What is that? Relatively equal highs. No all-time high, no nothing. This is just relatively equal highs. Bull run 1, 2, 3, 4, 5, 6 candle. Cleared the buy side liquidity. Then for the first time, I got the bear candle. Now here is the question, brother, how long this market is going for? Okay, I'm going to remove all of them. How can you predict where this market is reaching for? This is the area where I have no price action, right? Around this area, look, on my left, no price action. It's empty chart. There is nothing. Now price is here. Price is here. On my left, there is no price action. How can I know how long this market will go? This is the area where I would love to look for the breaker block. Let me mark it a bit more. Okay. 1, 2, 3. Low, lower low. Until lower low, not the expansion. Until lower low. 3 leg. 1, 2, 3. In my Discord channel, I have given you a level from standard deviation. I did a mistake because it's been a long. I didn't use the standard deviation. I used to use this leg as my standard deviation. I used to use this leg as my standard deviation for a long time. Okay, later I decided to use this leg, the middle leg, as my standard deviation because this is more clean, more beautiful, more precise. The middle leg. That means low, lower low, the middle leg. 1, 2, 3. Let's see where it happened around this area. If you see that specific leg, it came until here, then here, then there. Let me show you this. Now here this market went higher, fall, go higher, and fall again, then went higher. So what I have done, I have showed you from there to there, used the standard deviation. Just a second. Standard deviation. Okay, so that was the standard deviation. While I will use week to week, listen to me very carefully. If I use week to week, the most strongest level is -1 standard deviation, -2 standard deviation. If I use week to week, now it is wrong, absolutely. I'm not going to use the same standard deviation. I'm going to change the standard deviation, but I'm showing you. Previously I was used to use these two leg here, that manipulative leg which has been manipulated here around this, that low or that low, any of this low you can use. So this has been manipulated over here. How can I show you this? Let me mark it one more time. Like if I use from there, I'm just for the sake of this conversation, I'm going to use this one, that leg, okay. So here, this leg has been manipulated over there. So this is my breaker block. I used to use this leg as my breaker block. So market came from there, went higher, made a low, went higher again, took that low again, then started to go higher until it is not going to the all-time high. I don't need to mark the the standard deviation. While it has made the all-time high, now I need to look for the standard deviation to predict the extreme high or how long this market will go. So if I use week to week, the most strongest level is -1 standard deviation, -2 standard deviation. That doesn't mean that -1.5 standard deviation is useless. Of course not. It is also very important level, -1.5 standard deviation, which is the 50% of the -1 and -2 standard deviation. So in these two line, the 50% in this two line is -1.5. It is also strongest. But for me, either this market will reverse from here or here. If -1 standard I will mark the standard deviation in a right way, but I'm just telling you what I have shown you in my Discord at the beginning, and then Sachin give me the message. He told why I have marked this one. Then I remember, okay, I did a mistake because I don't use this leg anymore. It has been perfectly reacted from -1 standard deviation. This is according to ICT. So if you would love to use this leg as your standard deviation according to ICT, please go for it. I have no problem with that. Please go for it. I don't like to use it. I am not going to use it. I would love to use this leg as my standard deviation. I will use this leg, but I'm showing you this leg because this is according to ICT himself. So I'm not trying to reform or rebranding his standard deviation, nothing. I have observed the standard deviation. I have seen that this leg is more beautiful, more precise. So I love to use this leg. You want to use this leg? Go for it, man. Just don't tell me that, brother, you are rebranding. So here to here, -1 standard deviation, -2 standard deviation, but that doesn't mean it is useless. Of course, it is also important. This market can come until here, can start to fall. If -1 standard deviation is broken, I will say that this market will reach until -2 standard deviation. But in the meantime, while it will reach to -1.5 standard deviation, I will start to think that if it is not broken, then this market can reverse. So until it is not broken, I'm not going to think about this -2. In short, the most strongest level is -1 standard deviation, -2 standard deviation, according to me. If I use week to week, if I use highest body to lowest body, okay, sorry, highest body to lowest body, here, if I use the highest body to lowest body, The most strongest level is minus 1.5 standard deviation, minus 2.5 standard deviation. Same thing. The 50% of these two standard deviation is minus 2 standard deviation. It is also important, but most of the time I use them as a reaction. So it will come here, it will react from there. If it is not reacting, then it will be broken and market will reach at least until minus 2.5 standard deviation. Then this market will reverse again. So this minus 1.5 which has been broken here, if I see it has been broken, I'm more interested to see this market will come here. At the same time, I will mark week to week. So I will mark all the level, minus 1.5 standard deviation, minus 2.5 standard deviation. And when I am in week to week, I will mark minus 1 standard deviation, minus 2 standard deviation. Then I will observe both minus 1.5 and minus 1 standard deviation to get confirmation that this market is willing to go higher. Okay, so for example, this is minus 1.5 standard deviation from body to body. Okay, so let me mark it here. So that is the minus 1.5 standard deviation, and that is minus 1 standard deviation. If I see both of this level is broken, this market is obviously going to go higher. Okay, if I see one level is broken but another level is not broken, I will say okay, let him consolidate for some days, and then we will see does it want to reverse from minus 1 standard deviation or not. Is that clear? I'm talking about this standard deviation, but I will show you exactly what I am predicting for the all-time high after this. I just need to make sure that you got all the point, because here it is little complicated. So I need to make sure that do you get my point or not. How I'm going to predict that one level is broken, so another level is going to be triggered. If it is not broken, until it is not broken, it is not triggered. Why these two line is important? Week to week, body to body, which is more precise. Both of them are precise. Week to week, body to body, both of them are important. For me, body to body is more important than the week to week. But for example, here body to body, according to ICT, it's broken, right? 1.5 is broken. So I'm pretty much confident that this market is going for the minus 2.5 standard deviation because it is broken. But week to week, 1 standard deviation is still holding. Maybe it can a bit consolidate before going higher, but I'm pretty much confident it will go higher because minus 1.5 is broken. I will show you the real line. Okay, thank you Archana, thank you Matteo for understanding, brother. Aurelio Pilarets Jokium, welcome. Thank you so much, brother. Thank you so much. What did you say? I have yet to find someone explain to how to measure standard deviation from higher time frame. Explained beautifully here. Thank you, sir. You're most welcome, Matteo. Standard deviation, the Fibonacci. Yeah, Fibonacci. Okay. Here, if you go to the Fibonacci, sorry, not there. If you go to the Fibonacci here, see this Fib retracement. If you use that, you will get the extension level. Okay, retracement levels. So this is the area I am willing to use for the standard deviation projection. If anyone needs the line or anything, you can take a screenshot, or later you can come here, pause the video, and then you can mark them the way I have marked if you want. Okay, this is all I have marked over here. This is the Fib retracement level. So now I'm willing to mark low, high, lower low. Now here you can see this low and that low, they are the relatively equal lows. Okay, so either of this low you want to use, you can use. I have no problem with that. I am going to mark this low as a low that has been broken by that low. So I am going to use this low as my low, this high as my high, this low as my lower low. So market came from here, went higher, retrace, went higher, took that low. Okay, so this low and that low has been taken. So this is the middle leg, first leg, second leg, first leg, second leg, third leg. That leg has taken the previous low, is the third leg. The middle leg I'm more willing to take as my fifth level. From low to high, I'm going for the week to week for the first time. Okay, so week to week, the most important level is -1 standard deviation. This is the -1 standard deviation. So I'll write it down as I'll write them down. Okay, -1 block, so that I can later remember what is that line. -1 means I know I have marked the standard deviation week. That is why that is -1 standard deviation. I marked them as a -1 standard deviation. Okay, so that is that level. Going to make it like 3, the volt. And -2 standard deviation level is the next important level to me. That is the -2. I know that both of them I have marked from week to week. That means as the -1 standard deviation is broken, this market is reaching for that -2 standard deviation for sure. Until this market is not reaching here, I'm looking for buy only. Buy every day. From the daily chart, I'm bullish. Until this is not reaching until the -2 standard deviation. Why? Because -1 standard deviation is broken. Here, this is the middle of the two level. So I will mark it later just to understand that this is the 50%. So I will just change the color to maybe white. Okay, so that I can remember this is the 50% of these two level. Now I'm going to body here, body, there, the body. See the highest body, lowest body. In these two body, I have more important level here, which is -1.5 standard deviation, which is over here. This is the -1.5 standard deviation. Going to change the color again. Going to write it down -1.5, 1.5. When I will see on my right, this is -1.5. I know that this level I got from body to body, because this is -1.5. I got it from body to body. And this is -2.5 standard deviation. Okay, so here going to write it down -2.5 standard deviation. In between these two lines, there is another line which is important, which is the 50% of these two lines. Okay, that line. I'm now saying that it is important. Okay, I love to see it, just a reaction from there. But for me, the most important level is -1.5 standard deviation, -2.5 standard deviation, -1, -2. In between these two level or these four level, nothing is important to me. If -1.5 is broken, this market is going for at least -2.5. Or if -1 is broken, that means this market is reaching for -2 standard deviation, or until this -2.5 standard deviation for sure. There is nothing that can stop the market. If -2.5 is broken, then that is the last line for the extreme high or the prediction of the extreme high. That is the last line. But the 50% line, it can give some kind of reaction over there. Some kind of reaction can happen from that line. Okay, so I'm going to change the color as a green line. Some kind of reaction I can get from there. Now, if you mark that high and that low, you will see that this market didn't reach until this line. Okay, so here is a funny thing. I will show you this funny thing as well. Don't worry. And I'm going to mark it here. This low and that low, they are exactly clean lows. Okay, I have used this low at the beginning. I clearly told that I would love to use that candle, not that candle. But look, this low and that low, they are the same low. There is nothing difference in between these two lows. So if I just change a bit, just change this low here to here, there to there, is there any differences over here? I think you don't notice it, but there is a little difference. Okay, the gap in between this green line to this high, there is a gap. This gap is going to be changed a bit. If I change it, the gap is going to be changed a bit over there. just have seen that this is a gap. This market didn't tap to this line. That is why I'm willing to see, willing to use this low. If I saw that there is a huge gap, if I use this body, then this market is very near to this line. If I have used this body, then this market is very far from that line. If I saw that type of situation, then I would use the body that has went very near to this line as an hindsight. Now I would love to repeat it a bit one more time, because I think I didn't make it clear. This two low is exactly the same low. Okay, so I'm using the low and the lower low. This body closed here, that body closed there. See, this body has closed there, and this body is closed here. Even if I move them, there is a little different, a bit different. This market reached until minus 1.5 and minus 2.5, 50%. It is a bit different. As it is a bit different, I will love to use the first candle or first low body, first low it has made, and that candle body. But if I saw that I have used this low and this market is too far from that line, but if I use this body, then this market reach very near or tap to this line, I would use that low, not that body. I would use that body, not that body. But as there is a bit different, okay, maybe tick, maybe one handle, maybe two handle, maybe 5 tick different, just a bit different, I would love to use the first low or first candle body. Why you are talking about that? Because I have the exact same low over there. If there was a bit different, or it could be the low, it is a little higher, then obviously that could be my body. If this low could take that low, obviously I would use that body or that low as my standard deviation projection, as they're the exactly same low. And even if I change the standard deviation projection low from this body to that body, there is a very big difference that is absolutely unnoticeable. Okay, nobody can notice them. That is why I'm using, or I'm trying to use the first one, first low. Always first low is very important. Okay, the first low, if they're the very clean lows or something like that, the first low is very important to me. That is why I'm going to use this one. And now I'm going to remove the standard deviation. If you don't understand this, please try to watch it one more time. I hope that you will get the point. Now here I know that I have 4 lines, 1, 2, 3, 4. This 4 black line is from the standard deviation, one from week to week. This 2 line is week to week, which is -1 and -2. Another 2 is -1.5, -2.5 from body to body. In between these 2 lines, I have this 50% of the week to week standard deviation, and the green line in between body to body standard deviation. These 2 lines is not important to me. They can give some kind of reaction, I don't care, but I really don't care about them. Of course, it can make any high either to this line or that line. I don't care about that until it is going to prove that it has built the all-time high with this line or that line. I'm not going to accept that they are going to be very precise as an all-time high. For me, the -1.5, -1.5 and -1, both of them is broken. If you remember, if I use this high and that low according to ICT, then this market didn't break -1 standard deviation. Remember, it has broken -1.5, but it didn't break the -1 standard deviation. But if I use this middle leg, it has already broken -1 and -1.5. Both of them are broken. So when they're broken, I'm more confident to say that this market is reaching for that black line. At least it is reaching for that black line. After reaching to this black line, if body close above this black line, this is the next obvious level where market is reaching for. But if market doesn't close above this black line, which is body to body, for me it is more precise than week to week, because this is the body to body, and market failed to close above that line, this is gonna be your next all-time high level. This -2.5 is going to be your next all-time high level. But if it is broken, then this is going to be the next all-time high level until here. Okay, so what is the importance of these 2 levels? You know that this is broken, so you should keep looking for buy. No sell, only buy. Keep looking for buy. How long? Until minus 1.5 standard deviation or minus 2 standard deviation. In the meantime, these two level can give you a little reaction or something, okay, like something like that. For example, it tap to this line and then give you some kind of reaction. It can give something like that. But overall, this market is going to break this line, that line, and going to finally reach to this minus 2.5 standard deviation. Then we will see if market would love to reverse again or keep going higher to the Pluto. This is the Pluto, okay? To me, this is the Pluto. This was the moon. This is the sun. This is the Pluto, something like that. It is reaching for any of these two lines. Any of these two lines. So I will keep looking for buying opportunity until market is not going to prove that it has reversed either from this line or that line. So I will keep looking for buying opportunity until this black line. Is there any question to anyone? I mean, if you have any question, just let me know. You set your targets like this weekly? No, this is applicable only for the all-time high. Just for the all-time high. So question on the fib, you exchanged between those two relative candles changed quite a bit. Not sure if I understood the point. Sorry, I didn't understand your question. Koshi too. I didn't understand your question. What did you mean by that, brother? The fee you exchanged between those two relatively equal those candles changed quite a bit. Not quite a, I mean, there is a little difference, okay, as this market didn't tap to this line. Okay, it didn't tap. Let me show you. Look, there is a gap. See, there is a gap. It didn't tap to this line. And if I change the low of the standard deviation from this to there, the difference or the distance in between this line and the candle is not going to be changed too much. For example, this body to this body, market is coming here. This body to this body, this market is coming here. Okay, here somewhere. So there is a very visual change. The distance, visual change. Then maybe I will rethink about marking my standard deviation level as they're exactly clean lows. As they're the exactly clean lows. But if there is just one single low, okay, not clean lows, one single low, of course that low is the low. I'm not, for example, this low has taken that low. I don't care about that low at all. This is the area or this is the low which I'm going to give the highest priority. If we use 6 months, then what time frame we can align for market shift? X monthly we use daily. Example, monthly we use daily. If I use 6 months, then brother, I have no idea. I never use 6 months. My maximum time frame is 3 months. I never used 6 months, brother. Okay, then why the relatively equal lows for fib and not the lowest low? There is no lowest low, brother. This is the relatively equal lows. If you are asking about that, I have already told that clearly. ICT use this leg. ICT use that leg. So if any of you willing to use that leg, you can see how beautifully it has traded minus 1 standard deviation. I could show you that. See how beautifully it has reacted from there. No, I'm not interested. I don't like to use that one. For me, my observation told me that this middle leg is more precise. I would love to use the middle leg. That doesn't mean you have to use that leg. You can of course use that leg as well. It is all about your observation. It is all about your confidence. I'm more confident about this leg. I'm going to use that leg. Okay, I clearly cleared that at the beginning of this conversation, because I know later you will say, brother, I told you ICT is right, you are wrong. So of course I'm always wrong. Okay, I'm never right. So I'm not going to compete with ICT. I saw it is more obvious, so I would love to use these lines. If you want to use that, of course you can go for that. Did you change the mic? No, I didn't. Why, brother? Then what is market shift time frame for 3 months? 3 month, 1 month weekly, brother. 3 month, 1 month weekly. You're most welcome, Koshi. Did you change? No, I didn't. Why the sound is not good? It can be, brother. I'm just laying down. Okay, I just came from Dhaka to here, near about 400 kilometer. My journey was near about 400 kilometers, so I was just laying down on my bed and was talking to you guys. So there can be a little problem. Actually, I'm finished for today. I was more interested to say how to use the standard deviation projection and how to use those level. If it is broken, it is the next line. It is not broken, respecting market is going to fall. I am going to say that this is the all-time high. As it has been broken, as you can see, both minus 1.5 and minus 1, this is the next level. I am pretty much confident about that line and that line. Oh, my voice. Come on, man. The songs, yeah, it's fine. Songs? Is there any songs singing there? Brother, what if there is no middle leg? Can you please draw a line chart and explain a bit again, please? Of course, there will be a middle leg. If there is no middle leg, there is no standard deviation. Look, this market came here, 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 here. I'm going to ignore this one, okay? As I'm going to use this low, so I'm going to ignore that leg as they're the exact lows. If this low has taken that low, then I would use that leg as my standard deviation. So I'm going to use this leg and boom. So this is the middle leg. That low has been taken over here. This leg and that leg. This is the middle leg. Look, from there, okay? Low, high, lower low. Low, high, lower low. 1, 2, 3. 2 is the middle leg. First leg, second leg, third leg, middle leg. MSS and CISD. Brother, what is that question, man? MSS and CISD. CISD is a order block which is called change in state of delivery. MSS means market structure shift. That means this is the order block. This is the market structure shift. Both of them are the different things, right? CISD or order block is one thing. Market structure shift is different thing. Strongest liquidity. In a short, I'm telling this, okay? Think there is relatively equal highs. This high and that high, they are the relatively equal highs. Then this market fall here and it is going for that relatively equal highs, relatively equal highs, relatively equal highs. Finally, it came very near to that relatively equal highs, didn't clear that relatively equal highs, and then retrace a bit more. Trust me, this is the most strongest liquidity ever. This market will never fall before clearing that strongest liquidity. Never means 99% of the time. It is going to take that relatively equal highs, or sorry, strongest liquidity, and then it can fall or go higher. That is different matter. But while it came here, didn't clear the relatively equal highs, which was my buy side liquidity, which was my bias for that specific day. While it was reaching, right, it is going higher that specific day. I'm pretty much confident this market is going to take that relatively equal highs, but it didn't. Instead, it went very near to that relatively equal highs. What is my intention? The very next candle is going to clear that relatively equal highs, but the very next candle started to fall. While it started to fall, I have nothing to do. Why? Because I'm looking for buy, right? So market is falling, I have nothing to do. And then it came in a very specific way. A specific level, maybe in CISD, maybe in breaker block, maybe in last fair value gap, end fair value gap, whatever it is. It came here, gave me the bull setup there, I am pretty much confident, 99% confident this market is going to clear that strongest liquidity because it was the resistance zone. People has already taken sell over there, fall. While it came here, all those people who missed that sell, they are going to take sell again over there. This is now the strongest resistance zone ever. So they are going to take sell, and while this is falling, those people who didn't believe that this market will fall, they will start to chase the market because it is falling. They will start to chase this market, and then this market, without clearing any liquidity, the first or the last bullish PDRA it is going to use, and then stopped them, all of them, stopped them out, and then maybe it will fall, it will go higher, I don't care, that is different matter. And but this is the most strongest liquidity. Is that clear, brother? If there is higher low, there is no standard deviation. Penny. If lower low is not formed, there is no standard deviation. Aryan, I only follow your channel for learning, trading. Thank you, bro. You are most welcome. Sachin, very much clear. Thank you, brother. Okay. So if anyone has any question, let me know. Otherwise, I'm going to close. Okay. I just came here to say all of you hi, hello. It's been a long. I was not here. I was feeling like okay, I have to talk to them. I was missing you guys, to be honest. I know it's a very boring session, so boring session, but I just came to talk to you. That's all. That I had no other intention, nothing. But only talking is really so boring. That is why I have tried to talk about this price action a bit, but I'm really sorry for this boring session. Let me go to the 15-minute chart a bit. This is the Friday price action. Okay. In Friday, I told that I have no bias. I am biasless. Yeah, as it is all-time high, market has broken that minus 1.5, minus 1 standard deviation. It should keep going higher. The thing I have already explained you, right? Until this line, it should keep going higher. So all-time high can play the role. That means this market can start to go higher. I have no problem with that. But I have no bias. There is no bias. While this relatively equal lows, this low and that low, which was the relatively equal lows, was that I think that was the relatively equal lows. Yeah, this was the relatively equal lows. Okay, that is the relatively equal lows in Friday. That was my sell side liquidity. I told that clearly while this market came here around this area in that very, no, not there, here in Thursday I told that no, this market is not going to take that high. It is going to go for this sell side liquidity and that sell side liquidity. Let me show you this. Here I didn't mark this one, I marked that one, if you remember, because from 1 minute chart it is more obvious or more clean that sell side liquidity. That is why I have marked that one, didn't mark this one. And also remember that I was using my phone. Okay, so you guys had more facilities than me, but I was only depending on my phone. There was no new to opening gap mark, nothing was marked over there. I was like blind. I was clearly reading the price depending on the liquidity, fair value gap, and the highest level from the weekly chart. That was all I had, and I was reading the whole 2 month depending on that clean, just the price action. So I told that in Thursday, no, this market is not going higher. It is going to fall on Thursday. It is going to fall for this sell side liquidity, that on the first one, that on the next one. Thursday from 9:30, market boom, 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 fall. Then some of you ask me, what is your bias? Now it is going higher? No, I am not interested to see this market will go higher. I want to see this is going to fall again. That specific day in Thursday, market went higher. Then there was a selling opportunity around here. There was a selling opportunity there around 1:30. Overall, okay, the morning session has taken that sell side liquidity. Then this market went a bit higher until this random level here. That is the very random level. I love to mark the random level. So it reached until this random level, which is the there. trade this area, and this is the Friday. While it came here exactly around this area, I came to the Discord and I told that no, it's going to do the same thing like yesterday. So Friday I told that it is going to do the same thing like Thursday. It is going for that sell side liquidity now because it has been cleared. I have no sell side liquidity over there, but I have this sell side liquidity here. So it is reaching for that sell side liquidity. Unfortunately, this happened around you can see 8 p.m. New York local time, 9 p.m. It has cleared that sell side liquidity. Unfortunately, it has cleared that sell side liquidity. So while this sell side liquidity has taken, I told that I have no bias. I have no sell side liquidity. I have no buy side liquidity. All time high rules can play the game here. That means market has closed above these two lines, so it can start to go higher now. But I'm more interested to see this market is not going anywhere. It is going to be stay in the same range as I have no bias. How did I know that? I have no bias. This is the sell side liquidity, relatively equal lows. Why did you think that this market is going for that sell side liquidity? Because it has cleared here. The clean sell side liquidity has been cleared. After clearing that sell side liquidity, whatever sell side liquidity it is going to build, that is for later use, not for now. Later use, maybe after 1 month, after 1 year, after 5 years, I don't know when, but this is for later use. It's not going to be taken by immediately, so it is going to leave them the way I explained at the beginning from the daily chart. Remember, it should keep going higher, but while it has fallen, why it is going to fall? I was thinking that sell side liquidity is going to be taken for later use. Why it is falling, and then it came here and then went higher. This is the same thing. While it has built that sell side liquidity around this area, I'm not interested to see it is going to take that on immediately. Instead, it should stay around the same level around this area. Okay, so in Friday, I believe that from 9:30, this is that 9:30 candle here, then expand a bit higher. If I can find a buying opportunity over there, I'll go for that. Why? Because all-time high rules. Okay, nothing else, just because of all-time high rules. And also I have some buy side liquidity here, relatively equal highs around this area. It can go for that. There is nothing wrong with that. But more importantly, this is not that type of liquidity. This is the reaction from the last parabolic gap. So inside the last parabolic gap, it has just struggled to break that last parabolic gap. Failed to break it, boom, fall. Just boom, went higher, and now it was simply struggling over there around this area. If this was not the same day price action, for example, this was the leg from Thursday. Okay, in Thursday, market has cleared that sell side liquidity. In Friday, I would say that don't give a shit. That is the buy side liquidity market is going to take. Don't give a shit. It is going higher for that buy side liquidity. But as it happened in a very specific day, always remember every single day market has a job to do, a very specific job to do. If that job is done, trading is done. If the job is not done, market is going to go somewhere else. For example, Thursday cleared that sell side liquidity. Yeah, that is the extreme liquidity. Maybe market would go for that liquidity. So I'll keep looking for sell. But while this sell side liquidity is taken by Thursday, I'm done because the job is done. Then market went higher or whatever it has done. It's not clean to me and I'm not interested to participate or around that area. Friday, if this sell side liquidity is not taken, the job is not done. I'll look for that sell side liquidity. Buy anyhow. This is going for that sell side liquidity. If it take that sell side liquidity and that buy side liquidity the same day, that is very rare, very rare. Okay, something like this day. Okay, around here you can see it went higher and then it fall again. It's very rare, but most of the times in a day market has a very specific job. If the job is done, market doesn't move anywhere. It just keep doing this type of consolidation or range bound. If anyone is not agree with me, from 9:30 to until the closing, it was in range. There was no movement, nothing. It went a bit higher just because of the all-time high rules, nothing else. I think it's good. Oh, brother, are you in Portugal? No, I'm not in Portugal. Next month I'll go to Portugal, brother. My Hajj is great, brother. Feni, thank you, man, for asking. Thank you, Larry. Thank you so much, brother. Do we see you tomorrow, Tito? Inshallah. Miguel, if I'm not dead, inshallah, I'll be here tomorrow around the morning session as well as around the PM session. It can change our daily bias. Most strongest liquidity? No. daily bias can't be changed by the strongest liquidity. Daily bias is something, if strongest liquidity is according with your daily bias, that is the strongest liquidity. If it is not according to your daily bias, for example, you are bullish, you have the strongest buy side liquidity, then that is the strongest. If you are bullish and there is a strongest sell side liquidity, then you have to let the sell side liquidity to be taken first, then you will go for look for buy only. So you are not going to frame any sell setup, you will wait to take that sell side liquidity first, then you will start to frame your buy run. So it is also something, sometimes you get confused, brother, after taking this sell side liquidity, is market going to keep falling or is it going to reverse? Depending on that daily bias logic, you'll understand, is it going to clear that sell side liquidity and then start to reverse, or is it keep falling? For example, that buy side liquidity, while it will be taken, market will keep going higher. While it will be taken, it will keep going higher because your bias is bullish. Until where? Until this line. But it doesn't mean that very next day market open will go higher, very next day market open will go higher, something like that. No, it's not something like that. There is a level here, there is a level there. Okay, these two line, they can play some kind of drama, some kind of reaction, something, because they're also very important level, the 50% of 2 standard deviations level. Okay, I learned a lot today. Are you serious, Sudivan? I thought it's a very boring session, man. Because sometimes people use left swing and sometimes use right swing for MSS. Why and why they even ICT2 sometimes chart use right swing for MSS. Hi Aryan. In my YouTube channel, not my YouTube channel, in our YouTube channel, in the study folder, there is 2 video. One is how to avoid losing trade, and another one is market structure shift or something like that. They're just one after another. Okay, you please watch that on about the market structure shift, because I don't know what other is going to use. I know what ICT do, and I have made it much more clear by those 2 video. So I hope that it will help you. If you watch those 2 video about market structure shift, it will help you, brother. It's just my opinion. I'm not saying to use them, but you can watch them. Okay, it is going to waste 30 minutes maybe. So if you watch them, maybe it will waste your 30 minutes, but I hope that it will help you, brother. Okay. Please clear to me, sir. All-time high rules means just look for buy, no narrative, nothing. Absolutely. All-time high rules means it is around the all-time high, keep looking for buy. It is falling, don't care, keep looking for buy. It is falling, don't care, keep looking for buy. All-time high means keep looking for buy. According to ICT, okay, it's not my observation. It needs more time. Like ICT has 50, 30, 40 years experience, so he has seen a lot of all-time highs. He told this, I'm using that on. That's all, brother. Is Tradify safe to use? Does it expose the KYC to hackers? I don't think so. Tradify is one of the safest prop firm until now. I know like the direct funding, for direct funding, Tradify is more safer. Just my opinion, brother, but you please do your own research. I never heard about any kind of complaint against Tradify. Can I recite a pro account, one take profit trader? In other words, if I lose my account, can I return without having to pass the trial phase again? I think you have to pay a lot. If I'm not wrong, you have to pay a lot for that account. I don't appreciate that. If you fail, go for challenge again, because take profit is the easiest way to get the payout, daily payout. So if you spend like $100 for 50K account, something like that, I don't know what, now we have 40% discount if I'm not wrong. I think it will cost you how much, I have no idea. Just check it. If you fail the funded account or pro account, go for challenge account again, but don't reset that funded account by a huge amount of money. Don't do that. Just my personal opinion, but yeah, rest is your choice, brother. If you want to trade the Friday, give me deals and how to what did you say, Eagle Sniper? For example, if you want to trade on Friday, give me deals and how to entry them. Did you ask me something else? I miss. Understand, bro, but in some Michael's chart, I saw the mark right swing as MSS, that's why. I have no idea why he has marked like that way. I'm also learning, okay, Aryan. I'm also learning. I'm not a teacher, I'm not a master, I'm not nothing. I'm nothing. I'm learning like you. You are learning, I'm learning as well. So what I'm doing here, I'm just sharing my understanding. The way I'm learning, I'm trying to share that. So you can correct me, or maybe my information can help you, or your correction can help me, something like that. Okay, so I know everything? Absolutely not. I know very small, a very little. I know less than most of you. Most of you know thousand times better than me. Most of you. Uh, me, my knowledge is very small, very, very, very small. Okay. For example, I know how to use the relatively equal highs, but I don't know how to use the session high, previous day high, or previous week high. I never get the consistency depending on that, so I don't use them. I use the most easiest thing, and that is why my knowledge is very specific. Most of you know how to use the 4-hour chart. If you tell me to trade from 4-hour chart, maybe I will be able to trade, but I don't feel confident over here. I will say that I don't know how to trade the 4 hour chart 5 minutes. I don't know how to trade them. So you see, your knowledge is better than me. So sometimes I see to do something that is actually I say like he do this just to show off. Okay, some things like as a hindsight he marked the standard deviation, and when you will see that there is -1 standard deviation has respected perfectly, so he will change the swing. Previously he has used that swing, but this time this swing is not clear. So what is clear? This swing is clear, and this market is perfectly rejected from that swing standard deviation. So what he will do, he will mark this swing and show you, see how precise it is. I don't like it. I don't want to change my narrative, my knowledge depending on the market reaction. If I'm using this, I'm getting result by using that one, and one day it didn't work, but it has worked. I'm not going to change the leg. I would keep using that leg. I'm wrong, I'm okay with that, but I don't want to see the precision by changing my whole theme. Okay, I'm not a hater. I'm just saying you, okay, you can observe, you can see, you will see that I'm not lying. Trust me, man. For resetting TPT, it is higher cost of reset. Yeah, I was telling that MB. I mean, I'm saying that if you want to reset the pro account, you can do it. I don't appreciate it. I don't insist it. Instead, I will say you buy more challenge account, try to pass them. That's all, brother. But it's your choice. Your type of trade, do you trade profit as you go along? I used to be, and yeah, from the next week, I guess I will start trading again, because I don't like the shop. People are doing the shop by their payout things. I in Twitter, actually in Twitter I'm seeing that more people are showing their profit, one time profit, and then they're doing the marketing by their one time profit. I don't like it. I just would love to show you how to make the profit. I don't know why, but I changed my mind and I will do the live trading again. Maybe I need some money as well. That is also a reason. I don't know. London session one Friday, knowing that I have a sell bias. London session has no bias. London session is different, brother, for me. In our YouTube channel, you can go to the London session trade, London session section playlist. You can see where I explain the London session. For me, London session is absolutely a new world, new concept, new, everything is new over there. Okay, like there is no price action. There is something very specific, like 7 a.m. kills an entry, very specific. No bias, no fair value gap, no new opening gap, no new weak opening gap, no first presented gap, nothing at all. I hope it will help you, brother. Okay. I understand, Eagle, but that is why I'm saying the thing you are asking me, that is absolutely different of my understanding of the London session. So that is why I am not able to help you because I don't trade like the way you trade the London session. It's absolutely different, where you look for the liquidity and you look for the liquidity taken, and I look for the liquidity making. So where you are seeing relatively equal lows is your target, there I am seeing relatively equal lows means go against that liquidity level. If it has built here around the London session, okay, let me show you something. A London session, okay, is there a lot? Okay, here I think there is a London session. Just look over here, this is the London session. See, this is the London session, okay, from 15-minute chart. This is the leg, 2 a.m. New York local time. It has built relatively equal lows here. See this relatively equal lows in between 1 a.m. New York local time to 6 a.m. New York local time. In between 1 to 6, if it build the sell side liquidity, I will look for buy only. If it build buy side liquidity like this, relatively equal highs in between 1 to 5 or 6, I'll look for sell only. Here market has built relatively equal lows by 2 candle. This is the 2 candle. I will jump to 1-minute chart. I will look for buy only. No sell is valid to me. I know that this is going higher. Let me go another London session. Where is the London? Here. This is the London session. Okay. So around 1 a.m. Where is your 1 a.m.? This is the 1 a.m. Did it make any sell side liquidity? No. So do I have any trade? No. It went higher. It came exactly over here, made the relatively equal lows. There is some other things as well that is also important. Here it has built the relatively equal highs. I will start to look for sell. Why? Because it has built the relatively equal highs. And then if I get some kind of sell, I'll go for that. If I don't get, I'll wait. Then this market came here, around here, build another buy side liquidity. This high, that high. They are the relatively equal highs. Around 345. I will keep looking for sell again. Again, I'll look for sell, because it has built the relatively equal highs. That is why I'm more confident to take sell from 1-minute chart. Another London. So this is another London session. Okay, so in between 1 to 6, look at that candle. When this candle appeared, 12. It is not valid. So even if it has built relatively equal highs, I don't care. I care from 1 a.m. New York local time. So this is the 1 a.m. New York local time. From there, I will start to look for either relatively equal highs or relatively equal lows. What happened? This market fall came here exactly around 215, made this low and that low as a relatively equal lows. I will look for a buying opportunity from here, exactly from there, and my target is just 15 handle. So there is a run of 31 handle. So I know that if there is any kind of setup, I will get 15 handle for sure. Maybe I missed that sell. Okay, that buy. There was no buying setup. Then this candle appeared over here, when 345 build sell buy side liquidity. This high and that high, relatively equal highs, made buy side liquidity. I will start to look for sell again. From there, if there is any selling opportunity, I'll go for sell again until what time? I mean until 5:30 a.m. If I get any sell, perfect. I'll go for that. It has built again sell side liquidity. I'll go for buy. Build another buy side liquidity. I'll go for sell. In same session, I'll look for buy sell. If it build buy side, we'll start to look for sell until it doesn't build the sell side liquidity. Build sell side liquidity, start to go for buy until it built the buy side liquidity again. It built the buy side liquidity, I will start to look for sell from the same session. Buy sell, something like that, brother. Okay, so that is the way I trade the London session. So your way to trade London session, my way to trade London session is absolutely opposite way, where whatever is my base to look for buy, that is gonna be your target to look for sell. So we are going against each other. Where you are looking for sell, I will take buy confidently over there. Just for the London session. Just watch the London session video, you will understand what I'm talking about. Did you got any news about our young man? No, I have messaged him a lot of time, but he didn't reply me, and I have no other way to contact with him. I hope that he's happy, he's good. Just the internet problem. Suddenly he will come and say, "Hey guys, how are you?" I believe that, brother. Okay, guys, I think that uh, everything is done for today, and tomorrow, inshallah, we'll go for the first session after 2 months. Okay, so see you guys and take care of yourself. Enjoy your weekend. Tada.